Hi, and welcome to another episode of Money Talk, where we don't just talk about money, we talk about strategies on how to get it and how to get more of it. So, today we're going to talk about how to earn it, manage it, build it, and do it kind of actively and passively. So, we've got a really good expert with us. But before we get started, I want to ask you something. Do you have a freedom formula? The freedom formula, like, I want you to think about if you had all the money in the world, what would you do with it? How would you live your life? Would it be any different than the life that you're living right now? How many of you are living your best life right now? See, a freedom formula means we know what we want. Sometimes we don't know exactly what we want, but we sure can attract what we don't want. So when I'm thinking about a freedom formula, I think about what kind of house do I want to live in? What kind of car do I want to drive? How much does it cost? Because once you understand these components, you're going to know how much you need to make and support that kind of a life. That's what I mean by a freedom formula. And today we're going to talk about a freedom formula of a different type and a strategy that you're going to be able to work with. But right now, I want you to do two things. Kill the dog. Macy, come here. Well, that's not actually one of the things I want you to do, but we will be right back. So stay tuned.
Linda gave me the courage, the confidence to move forward.
And after I was finished with Linda K's training, I was at the next level.
It's Linda K. But when you trust that piece of you that says, I got something to give, I have something to say, you know you've got something to do.
Get on your feet, shake your hands in the air. Welcome to the stage, Linda K.
And we are back. So I have sequestered the dog. So if she interrupts again, it's a squirrel. You know, we get interrupted so many times and divert our attention to something that just says it's so important to look at because it's just another squirrel. Well, what kinds of things are you doing to create that freedom formula for yourself? Today, we're going to talk to somebody that is the founder of Empower Financial Wellness. She's also a financial wellness coach, a wealth strategist. She helps empower women build wealth by investing in the stock market. Well, who wouldn't want the advice from an Ivy League grad with an extensive background with close to 30 years of experience in the financial market? Welcome to our stage, Myrna Laine-Hyppolite. And welcome. Hey.
Hello, hello. Thanks for having me, Linda.
I am delighted. And if that squirrel goes running across the backyard, she'll be off at it again. So I will recuse myself as I sequester the dog another time. So thank you for joining us today. Talk to me about what kinds of issues come up for women that really don't want to take possession of their finances. And when I say they don't want to take possession, they'd rather have somebody else be responsible for it. Can you talk to that for a second?
I mean, there are a lot of issues, and I work with women primarily and help them understand that managing their money is essential, and it can be a form of self-care. I know when we think about self-care, people think about massages, pedicures, but managing your money can also be a form of self-care because a lot of the resistance that I receive can be, well, Myrna, I don't have the time, or Myrna, I don't know what I'm doing, or Myrna, my husband takes care of that. And people tend to
somebody else take care of it because I don't want to be responsible for it. I don't think they really actively say, I don't want to be responsible for it, but they think it's harder than it really is. Would you agree?
I would definitely agree. And just because somebody may be responsible for it doesn't mean that you don't have the onus to really take a look and have some accountability. Because what I found with my clients sometimes is that, which is also why I founded my business, is that you have women that may have taken their eye off the ball when it came to their money. And they were with a partner and building, assets, and then 20 years down the line, the love of their life turns into their worst nemesis, and then they have nothing to show for it when they were building all along. So if your husband's managing or your partner's managing the money or doing the investing, you owe it to yourself to understand what's happening and to have a say in the investing and in the managing of the money in your household.
So are the women that you are talking about and helping and empowering wage earners themselves, or are we talking about an all-inclusive group of women that whether they're employed or they're not employed, they are participating in the well-being of their future?
No, we're talking about wage earners, powerhouse women, people who, have, very high paying, jobs, or entrepreneurs, right, who are establishing their business and who are generating consistent revenue. And so these are people who have come into a place and have said, hey, Myrna, I have a little bit of money now, but I'm not sure if I'm really maximizing that money. Am I really doing the best that I could possibly do with the money that I have? Am I making that money work hard for me? Because people, we work for our money, but we want our money to work for us. And, those are the women that I tend to deal with that are successful individuals. They have accolades, they have the letters in front of their name and the back of their name, and they feel that they are a success in their own right, but that money management area tends to be an area that's not 100% successful or at the same level as other successes in their lives.
So do you think it's because they are busy with what they're doing that became, I don't know, disinterested in the financial part of this? What makes a woman take her eye off the ball of her money, her wallet?
Well, I think it's busyness, because we're all busy. I mean, as women, sometimes we have multiple roles: caregiver, you're the wife, you're the daughter, you're the mother. There are different roles that we assume, but sometimes it tends to be a lack of knowledge, right? A lack of education or financial education. And what I find with my clients, because I deal primarily with investing in the stock market, is that they don't know what they don't know, right? There are certain myths surrounding investing in the stock market, and they believe those myths, and whether it's not starting at all or not really understanding what's happening and not taking the time to understand that tends to be the barrier. And sometimes they're busy, but sometimes they just don't know what they don't know, and they put it off and say, I'll take care of this later, when time is really costing you money.
And time is money. Absolutely. I'm going to present a scenario for you, Myrna. And I work primarily with real estate investors, and they make some of the same mistakes that you're talking about with women. Very successful. But, if you're sitting on a large amount of cash, let's say, for instance, $250,000 in this instance, where we knew that the tenant was going to be using that money for tenant improvement when they got ready to do that. But for a couple of years, they didn't do it. So that money sat. What are some of the ways that you would have advised that kind of a client to put that money into so it would work for them? And then I'm going to tell you what they actually did with it.
Okay. Well, I mean, that's a substantial amount of cash, knowing that you're going to need it. So there is, looking at the term, right? So if it's money that you're going to need within a year or two, you don't want to necessarily have it tied up and invested in more of a long-term strategy in the stock market. But, at a minimum, you should have a money market fund or a high yield savings plan, because right now we're dealing in an environment with high interest rates. So you should at least, if you're listening to the sound of my voice today and you don't have a savings account that's generating at least 4% interest, then you need to go talk to your bank and say, what have you done for me lately, and what can you do for me? Because too many times we're sitting here and we're in a savings account generating 0.05%. That's not going to work. Inflation is real, although we did hear news that inflation is cooling off, but it's still around and it's still there. And you want something where you're going to be able to outpace inflation. So in that case of, the $250,000, you don't want that sitting around, because $250,000 at 4% interest you can leverage something. Now, to the extent that that you might have maybe more than a year, or you're in that year to 2 bracket, maybe you can stagger what you're investing in, right? You might have that high yield savings account, maybe look at a shorter term vehicle. Even times, some of my clients, I tell them, well, maybe you can stagger it and use a stagger strategy where you're investing in a certificate of deposit where interest rates might be 5% or more, some with no penalty. You need to find out if there's no penalty, right? Because if you're withdrawing your money before time's up, then there is going to be a penalty. So
Right.
having that strategy works. So the purpose of that, now, if it's a longer term type of proposition, then the stock market is definitely a good avenue to put your money and generate returns, definitely well north of 4%.
So, and thank you for that. I'm going to say that what they did was put it into government bonds. Now, government bonds would seem like it would be very safe to do, right? So whether it's stocks or bonds. And so, for our listeners, as we're talking about how to make your money grow, how to invest it, how to be smart about your money. And we're talking about a scenario where somebody had $250,000, put it into a government bond, knowing that it will not be taxable income. But what has happened over the last 2 years with government bonds? They've actually gone down in value, right? So you're not just getting them, you're losing money, for goodness sakes. So, and can you anticipate that? Can you not anticipate that? Here's one thing, and biggest difference between what I do and what you do, Myrna, is mine is a very long-term strategy. It's at least a 2-year to a 5-year hold, right? There's nothing liquid about real estate, whether it's residential or commercial. There's nothing liquid about it because it really is dependent on the market. As opposed to, you could put it in an order, put a stop order, put a call order, and put something in, and it's gone like that, and you get your cash. So what you're talking about then is helping women really become much more knowledgeable. Do you teach them how to read the tea leaves, as they say? So you teach them how to read the stock to see how it's going to perform, or to look at a K1 to look at a K1 report, or to look at things in a different way where they can self-educate.
All right. I work with clients one-on-one, but I also have group investing coaching programs where essentially I'm working with people who may have dabbled a little bit in investing, or who have not invested in the stock market at all. And so the program is a 6-week program where we start from the very beginning, like what is a stock, that basic, and build our way up, where they learn what to look at when they're looking at a particular stock, what to look for in a mutual fund, what to look for in an exchange traded fund. So that coming out of the program, they have their investments, they have the tools to select their investments and evaluate their investments, and they can make their own selections. I am not an investment advisor. I am a financial coach. So I don't tell them, hey, you go invest in X, Y, and Z. I give them the tools and educate them so they can make their own informed investment decisions.
That's a huge distinction, because there are so many people that are very, very quick to want to give you their advice, right?
Right.
And so they make money on that advice as well. Yours is a very clear and concise way of people understanding what they don't know and how to improve what they don't know. Now, when you're talking to women can have a certain amount of fear around that money, right? Fear, I think about, one of my deepest fears would be, running out of money, outliving my money, or becoming a bag lady. Although I wouldn't mind it being a Louis Vuitton bag or a Chanel, or right. But we get kind of desensitized, I'm going to say, to taking any amount of risk. In fact, we want to hold on to that money and do nothing with it. What are some of the better strategies that you have for women that are sitting on some cash, that think they're tuned in, and so many women and men believe that their biggest investment is their house, right? So I'm going to invest in the house. The house is a money eater. It's a money pit, and it has a really good, healthy appetite for your savings account, your stock accounts, your 401k and things like that. So what are some of your strategies that you're teaching women about how to view their money in a way that is productive and essential, but also helping them empower and enrich their lives by the stock market and other strategies?
Well, for me, I really teach women. Well, first of all, we need to realize that as women, our average life expectancy tends to really exceed men's, right? The average life expectancy for a woman here in the United States of America is 81 years old. And so if you're at that point where you're retiring based on where Social Security says you retire, you're going to have quite a few years. So you're going to need to be prepared. And we all know that Social Security is definitely not enough to potentially live on. So what I really try to demonstrate and show to my clients is really the power of investing and the power of compounding and what that does over time. And I teach them concepts like the rule of 72 and how they can apply that to grow their money. Because right now we take a look at their situation. If they're a situation where they're holding on to cash, how much more could you be doing if you had 10% on your money, which is the return that the markets have generated over time? And I show them visually, hey, this is what this could potentially mean with you at a 10% interest rate. Every 7 years, you're doubling your money. And that's if you're not, making contributions. But I let them know and show them that really there's 3 keys to the magic formula for success when it comes to investing. Key number 1 is time, right? Because it's never too late. If you're 60 years old and your average life expectancy is 81, that's a good 21 years. So you need to get started. But obviously, if you're starting at 20, you're in great position because you'll be much better off when you reach that 81 years old of age. So time is very important. You need to start now and you need to have time on your side. 2 is consistency. That's the one thing that I also teach my clients, to be able to invest with consistency. You don't just invest one time and just let it ride after a period. No, you want to be able to invest meticulously, methodically, every single month. So making sure that you're investing on a regular basis is important. Consistency is the second key. Number 3 is a good rate of return. So you want to be invested in the stock market where you're generating more than that 4 to 5% or 0.05% from a savings account. You want to be able to generate 10% plus returns. And to the extent that you're generating those returns, that will help grow your money and help put you on the fast track to growing wealth. So those are the key formulas to being a successful investor in the stock market. And those are the things that I teach my clients and teach them how to apply that so that when they come out of my investing program, their investments are on autopilot. So they don't have to think about it, because the women that I deal with are busy women, busy professionals, busy entrepreneurs. They don't want to be looking at, this stock, that stock, this mutual fund. We figure out what your strategy is going to look like, and then they make the decisions to be able to invest on a recurring basis.
Do you take into consideration risk factors? So risk factors associated with age, risk factors associated with return, or risk factor associated with wanting to collapse that rule of 72 and make more and make it earlier?
Yes, absolutely. So one of the things that I work with my clients on is what I call your investor persona, because what I invest in, Linda, may not be what you choose to invest in. Right. So it's kind of like food. I think of it like food. Some people like spicy food. Some people are allergic to seafood. Others, are vegan, etc. You have to understand what your investor persona is, because what I choose to invest in may not be what you choose to invest in. And so we go through a process of identifying what that investor persona is, and then you can make your decisions based on that investor persona, right? Because if you're that type of person who's going to take to the bed if the market goes down in one day 10% and you're going to be depressed, then there are certain things you just have no business being invested in. And that's what I help them decipher what their investor persona is. And when they come out, they say, hey, Myrna, I might be willing to give up, 5% upside if I know that I'm not going to go take to the bed if the market goes down by 10%.
I look at your market a little differently than mine. But they both are conditioned by certain things that are similar. The interest rates, say for instance, or the whims of the market. But I think that the whims of the market are a little bit more sensitive in the stock market, in that we've all heard this thing of herd mentality. Talk to me about how that discipline and the consistency can overcome and override that the winds of the market, the anxiety, the hand wringing. Oh my God, what's going to happen?
Well, we can't, predict what's going to happen with the market. So having that consistent strategy is of the utmost importance, because when the stock market goes down, if you're, say, committed to investing $500 a month, $500 a month, stock market goes down, that means you're buying more shares so that when it goes up, you'll have more. If it's high, then you're buying $500, you're buying fewer shares. But the whole concept of what I call dollar cost averaging, which is making sure you're investing every single month, helps you mitigate risk in the overall market, because you're doing it consistently and you're not saying, oh, let me try to pick a time to invest. Maybe the market's at a high or maybe it's at a low. We can't predict what the market's going to do. So being able to apply a strategy where you're investing consistently every month helps you mitigate some of those risks that come with the up and downs in the market. And one of the misconceptions and myths that people who sometimes come to me tend to think is, well, Myrna, I haven't invested my money in the market because, one, I'm afraid I'm going to lose all my money.
Right.
The money that I work for.
That's a real fear for a lot of people.
That is a big fear. But what you need to understand is, one, understanding what your risk investor persona is, and two, understanding the fluctuations in markets. Markets go up, markets go down. If we look at the whole history of the market, at least the recent history from 1995 to now, there were only 3 consecutive years where the market was down. After that, you have market could be up 2 years, 3 years, then it's down one single year. So the periods of bull runs, as they call it, of a bull market when the markets are up, last a lot longer than the bear market periods. So you need to take into context the whole market and what happens, and give it a long-term strategy and long-term focus.
That's a lot to think about. And I think that you're right in that with that persona and understanding your investment strategy is key. But there are a lot of women and men, but particularly women, that have almost a self-sabotaging mindset, and they're not even aware of it. It's more on a subconscious level that they're investing in something because they have not been educated. Are you educating them on, here, this is the kind of stock that you might want to have because it pays dividends, or this is the kind of stock you want to have because you want to have growth. This is the kind of stock that, pull it out and park it over there and do this. Is that the kind of strategy that you're teaching this group of women that don't have time to go think about all that?
Yes, at a higher level. We go into some of the deeper concepts. So once you're done with my group, I have a membership, which is the Empowered Women's Investing Circle. And we meet once a month where we do more of a deeper dive. So if you want to continue to flex your investing muscles after the program, we do a deeper dive. And every month we cover a different topic. 1 month we covered dividends. 1 month we covered AI and what that means in terms of AI stocks. Another month we covered REITs, real estate investment trusts. So there are different topics. Obviously, in 6 weeks, you can't cover everything, but the purpose of the 6 weeks is to be able to give you enough of a foundation where you can get started and you can invest on a recurring basis and take advantage of the fact that the stock market is an avenue for us as women to build wealth. And that's what I'm really passionate about.
I can hear the passion. How much is the right amount for us to be saving? And before we get to that, I know that you're dealing with women that are high earners, probably 6-figure, 7-figure earners. And then there are people that are looking and dabbling that are going to be up in that same area that are already saving. how much is too little to be able to invest? What's the average advice that you would give somebody that this is when you need to get started? This is how you get started.
Well, savings and investing. So savings, on the savings front, I always tell people that will vary. You need at a minimum 3 to 6 months worth of your baseline expenses saved in a high yield savings account right now, generating at least 4%. I say 3 to 6 months because I say, let's say you're an entrepreneur, your income dries up for a few months. Let's say you are a W-2 earner and you lose your job. How much money are you going to need? And it depends on the job, frankly. If you're, some of my, entrepreneurs, they have, businesses where they have recurring streams of income, it may require less money. But if I'm looking at a W-2 person, a person who's like a CEO, CFO of a business, for example, then I may require them to have a little bit more, like 12 months, because, hey, you don't know, you're a higher earning job. It may take you longer to find a position than somebody else. And when I say baseline expenses, I mean, hey, if your sources of income dry up, what are the things that you're still going to have to pay? You're still going to have to have a roof over your head. You're still going to have to pay for the internet, maybe to find yourself another job or get more business. So there are certain things you're still going to need. So those are the baseline expenses that you want to have. When it comes to investing, on the investing side, you pretty much have to realize how much is it that you can afford to invest based on the money that you're earning, and what's your appetite in terms of loss. Because I may say, hey, I can invest $1,000 a month, right? But understanding that $1,000 a month will go through fluctuations, ups and downs. But then if you're not comfortable with that, then you might choose a lower amount and start your way slow. And then as you get more familiar with the market and see what happens, then you build up.
Our younger investors are now starting to have an appetite for crypto and cryptocurrency and crypto stock, which is, clearly in places that are not traditional investment or portfolios. Can you speak for a second about the crypto market, or is that like kryptonite?
I don't dabble in the crypto market. It's something that I've kind of starting to learn on my own, but there's a lot of volatility there, right? And so I stick with what I know, which for now is the stock market, and that's where my experience has been, and that's where I know that I can get results for my clients.
That's sage advice, because many people are really interested in knowing what made Bitcoin go up like that. But we see in that market, and I don't know that there's the same kind of volatility in the stock market where you see investors push that up like GameStop, right? GameStop, where you're gaming the system. You're pushing the stock up and pushing up until you're at the top, take all yours out, and then let it crash. So is the stock market, in the same way that crypto is, equally as volatile?
I would say no. It's not equally as volatile, because some of the stocks like GameStop are a little bit different, tend to be characterized as meme stocks, where you do have that kind of herd mentality. Let's go. You want to be, what I teach my clients is that you want to be able to pick investments where the companies have solid fundamentals, right? These are companies that are solid, that may give out dividends, that have a good history, and companies that we know are going to be potentially in existence for a little while. So, and that have good solid history of financials, positive earnings. There are a number of things that I teach my clients to look for when we're looking at investments, so that we can look and think of our investments as long-term in nature.
That's awesome. Myrna, how do people find you?
All right. Well, I can be found on Facebook under my name, and on LinkedIn as well. I am also I have my company website, which is empowerfinancialwellness.com. I will invite all the listeners to schedule a complimentary investing strategy call with me, where I will give you 2 golden nuggets that will help you on your investment journey, free of charge. And I am also on Instagram at Empower Financial Wellness.
Oh my goodness. And those 2 nuggets, who's not going to want to have those? You're such a wealth of information. Myrna, thank you so much for joining us today. I can't believe our time is already up. I really encourage my listeners and the viewers here to reach out to Myrna if you're looking to empower yourself about knowledge about the stock market and how to gain that financial freedom. Thank you again, Myrna.
And thanks for having me, Linda.
You're welcome. And thank you all for joining us. And today was just a really special day about being able to, again, gain more knowledge, more sophistication, understanding consistency is part of this. And I want to encourage you to join me again next week when we talk about money.
Do you like to talk about money? If you do and you'd like to be a guest, contact me at lindak360.com.